starting a crypto business while working at a bank, not the smartest idea. Found that out the hard way.
You started Easy Crypto from a hammock in Bali, is the backstory that we've dug up?
Random strangers were putting cash into his bank account for him to buy the magic internet money. And he tells me what he's done on about day 5, and I was like, whoa, dude, you need to take that thing offline right now. I was on a panel the other day with Jovan from Emerge who made the comment of raising $12 million, it's not $12 million, it's 12 million promises. When I started off, I would think, if I can't understand it, there must be something wrong with me. But no, I'm smart, you're smart. Most of us, we have the ability to understand things, and if someone can't explain it to us, the problem is probably not us. Got laughed out of a few places. People were not into crypto. They thought it was some weird, crazy thing. I remember one company saying, we only support SaaS businesses. And I'm like, what do you think I'm selling? I'm not making shoes or widgets. Well, you know what they say, everyone's got a plan until you get punched in the face. And I think for us, 2022 kind of punched us in the face in many regards. So I personally come from corporates where, you may be in person, but some days you're just like, I just can't face going into work today. It's just soul destroying. And I'm like, I do not want to be a destroyer of souls.
Today's guest, Janine Grainger, almost needs no introduction. She's recognised as being a top 40 under 40. She has advised government on fiscal and crypto-related matters. She was obviously the founder of Easy Crypto, which is New Zealand's leading crypto business and largest crypto exchange. So she's recognised as being the expert in this space in New Zealand. She built a fascinating business during a really tumultuous time in a market undergoing multiple changes and that was facing some really unusual headwinds. She's generous with her insights around leadership, around culture, around fundraising, around business in general. And almost most importantly, she went to primary school with my wife, Tina. I hope you love this conversation. I certainly did. I'm Josh. Welcome to the show. And particularly today, Janine, welcome to the show. It's great to have you here.
Thank you, Josh. Great to be in.
So what is it that you wish that more people knew but don't know about crypto?
That it's not about the technology, it's about the use cases. And so a lot of people get hung up on, I don't know anything about crypto, I don't know how it works, I don't understand the blockchain. But when you think about the parallels with the internet, most of us don't know how the internet works. We don't know what's under the hood, what's driving the connectivity, but we know how to use it and we know what it can be used for and how it can improve our lives. It's the same sort of deal. We can use crypto, we can improve the way that we engage with financial products and services and digitize them without needing to understand the tech under the hood.
So do you think that most people are put off because they think that it's their business to understand how it works as opposed to what the use case, i.e. the thing that it does, is?
Yeah, I think it's a big barrier. People are intimidated by, I don't understand this new and different thing, so therefore I can't use it. But understanding it and using it are actually quite separate considerations.
Yeah, absolutely. And it probably doesn't help people as well that there's been some relatively high-profile cases of fraudulent activity, coins getting lost, that sort of thing.
Yeah, and in those cases, a lot of the requirements or parallels there to traditional money and finance still hold up. Like, for example, the whole scandal with FTX, it was, a custodian of funds that wasn't actually custodying them, didn't have good audits, didn't have good governance. That kind of thing can happen with a bank, with a financial service provider. It wasn't specifically about crypto.
Yeah. And so if we go back to the start of Easy Crypto, how much of these things were familiar to you before you began the business?
So the Easy Crypto origin story, that was back 2017, and so cryptocurrency was very new then. I'd personally gotten involved in crypto a few years earlier, 2014, and I came across it on the internet and was just like, this thing makes a lot of sense. We had this global village with the internet, we had global communications with email, but we didn't have a global money or a global payment system. So I dabbled in Bitcoin back then. I thought it would be the next big thing, but then nothing happened. And it wasn't until 2017 that we had sort of the first big public boom cycle of cryptocurrency that everyone else started talking about it and it became more popular and more known, but also very misunderstood. So, those issues have been there right from the start of people going, I don't understand what this thing is. I don't know how it works. I don't understand the technology. Therefore,
Yeah. And so you'd been working as a strategy consultant at PwC at that stage. Had you been brewing on an idea to get something like a crypto exchange going and you'd kind of shelved this business plan in the bottom drawer waiting for the opportunity? Or was it more when the market went through that spike that you went, the time seems to be right for us to think about making a play for this?
It was a bit of an accident, really. I was actually working at Westpac at the time, and just as a side note, starting a crypto business while working at a bank, not the smartest idea.
No
Found
doubt.
that out the hard way. But so what had happened was, because people in the bank knew that I knew stuff about crypto, they were all coming to me with their crypto questions. Janine, how does this work? Can you come talk to our clients? Can you give a presentation to the bank? And so I had to become an overnight expert in something I really knew nothing about, just because I knew more than the next person. And this is actually one of my learnings from starting a business, is I truly believe that you can become an overnight expert in anything if the subject matter is small enough. Because, there is a finite amount to learn about any one thing. So just take some time, dive in, and you can really upskill yourself quite quickly. And so I became the overnight expert in crypto just because I was being asked questions. I didn't have the answers. I found them out. And then a lot of the time, these presentations I was giving or these conversations I was having with people would end with, how do I buy some? And that's where it got a bit trickier, because it was actually quite hard to buy cryptocurrency back then. And not only was it hard, but it was really expensive. New Zealanders were paying 15% above the global market rate for a product that has no shipping cost, fully digital. And so, I was talking about this with my brother, and he was like, this is really unfair. And he also was in a position himself of, helping a lot of his friends buy cryptocurrency. And he's like, there must be an easier way to do this. So he coded up a site for people to buy cryptocurrency in New Zealand, made it massively cheaper than the competition. And then all of a sudden we had a business.
Yeah, wow. We live in an incredibly exciting time, and Web3 and the things that sit on Web3 is a part of that. Obviously, we're right in the early stages of the AI revolution that's going on. And so for a lot of folk, they're considering how they might pivot their business, how they might pivot their career. And so I'm going to pick up on that point that you made about becoming an overnight expert on something. How did you go about doing that? And is there like a formula that you could advocate to people so they could have the same sort of experience?
Yeah, you've got to use the resources that are available, which will depend on what you're looking at. But for me, the resources were the internet. Like, information about cryptocurrency did not exist outside of the internet. There are no books on this. There's no university classes. It was very new. And a lot of it was existing in forums, existing in, communities of people who are understanding the stuff as it went about. I remember the first time I came across what's called a hard fork, and I was explaining it to my brother of like, our Bitcoin has separated into two lots of Bitcoin and we've now got double. And he's like, no, it doesn't work that way. And I was like, look, here's the, the tech, and here's the thing. And, it's like, we were all just figuring it out as we went, and there weren't places that you could go to. So a lot of it was finding the information where it does exist, extrapolating it where it doesn't, and sharing it with other people as well. Because particularly, again, you take a subject matter down to something quite narrow, there aren't going to be a lot of experts out there. It might be you are the only one. So, you are creating that new field of knowledge. Yeah.
It's exciting, fascinating, and a little bit scary for a lot of people as well, all at the same time. And so as you've gone through the journey of becoming an actual expert, at the start you were kind of an instant expert, if I can just make that terminology up right now, you become an actual expert. And no doubt you had to then bring people in on that journey to assist you to fill in skills gaps across the organisation, bring in specialists that could do certain things. How do you differentiate between someone who might be an instant expert, using that terminology, versus someone who is an actual expert? Is this something you've thought about, or is it something which you have instinctively?
It's a very difficult one as a founder and as a business owner, particularly in startup, is that you have to trust people who are experts in things you're not an expert in. Yeah. And you don't necessarily have that. I remember when we were starting to trying to hire developers. Now, neither my brother nor I were developers by background. He had learned how to code in order to build the site. However, we didn't have the sort of the formal education, the experience, the practice. So for us to go and hire people in that area was really difficult because we didn't know what questions to ask. We didn't know how to test them. Similarly for marketing and in other areas that we weren't familiar with ourselves. So it is a really difficult one. And, the best advice I guess I can give there is to lean on other people. Like, look for people in your networks who are experts, try to rope them in to help you understand what to look for, the right questions to ask. Because unfortunately, there's too many people out there that can pretend to be good at something that they're actually not any good at. And when you're a young business, when you're fighting for every dollar of revenue, you don't want to be spending money on people who aren't going to help you drive the ship forward.
Yeah, in the world in which we live, the temptation and the pull is away from social environments and dynamics and into the digital world. And some of that's great, and a lot of it is quite scary because it's removing the opportunity for connection, which is that we've now proven time and time again, actually, that the thing that keeps us happier, healthier for longer is positive relationships. And you've mentioned the network there, and the network is about having connections with people and finding people. So it's back to that old school kind of thing, which is about having good relationships with people that are smart, that you trust, that you can call on for different things over time. I have a approach which I quite like, which is that if someone's explaining something to me and there's a lot of terminology or jargon laden in that explanation, I take two different approaches. The first is that I say to them, can you explain that to me in a different way? So take a different tack altogether. And then if they're struggling to do that, my alarm bells start to go off. But then I say, tell you what, can you explain this to me like I'm your grandmother or a 5-year-old?
Yeah.
Because I want the simplest language. What I've learned over time is the people that understand a subject the best are able to articulate it in the most simple way. So they're able to distill things right down to their very core and their essence and not get caught up in overusing jargon and terminology along the way. So
100%. And it's such an important lesson. Like when I started off, I would think, if I can't understand it, there must be something wrong with me. But no, I'm smart, you're smart. Most of us, we have the ability to understand things. And if someone can't explain it to us, the problem is probably not us, it's probably them. And like you say, someone who really understands their subject matter can explain it to you.
Yeah.
I remember working with a technical guy who was like, you wouldn't understand it, you're a non-technical founder. And I'm like, try me. And, it's like, if he can't explain it to me, then, I actually, am pretty well able to grasp technical concepts. Most of us can. They're not rocket science. And even rocket science, the right person can explain it in a way that is understandable.
Yeah.
I love reading books on things that are outside of my, area of expertise, because if they're well written, I'm like, I can understand it and I learn something new and enjoy it.
Yeah, that's a really good and interesting conversation thread. Again, coming back to that, the world is moving at a rate of pace, and there's some things which will stay as truisms over time. For me, I believe that philosophy and understanding different forms of philosophy enables you to become a effective thinker about things. Are there subjects that are like pet subjects for you that you kind of have immersed yourselves in over the last few years, which help you understand the realm of the complexity of the world that we live in today?
I mean, I love physics, everything from sort of like quantum gravity and quantum physics all the way through, the macro to the micro. I think it's a really fascinating way to understand our world. Quantum computing, again, similar sort of thing. It's like, this is not something I could work in. I do not have the skill set intelligence for that, but I love reading about it and, bringing myself up to speed, learning about it and learning about, I guess, that art of the possible. And also for me personally, I'm fascinated by the edges of human knowledge. Like back in the day, you had explorers who, were exploring parts of the world that were unknown, at least to their own culture, probably known to other cultures. We don't have very much of the world today that's unexplored, but, we have space, we have physics, we have undersea, like certain areas that are still and the human mind as well as another one. Like it is such an unknown area. How does the mind work? The concepts of self, of soul, of all of those things. I find them super fascinating.
Likewise, I agree. Probably different levels and at different times. So we've had a really interesting broad brush introduction to this conversation. Let's go back.
Let's talk about business.
Yeah. Let's talk about business, and let's talk about, actually, Janine. So you left school at 15. So essentially kind of dropped out of the classical path, which would have been to head to university. I know that you went back to university later on, but you left and you went into an entry-level job, and then you started to work your way through in the travel industry, I understand.
Yeah, I dropped out of school and got a job at a cafe, and then a friend of a friend had an opening at a travel agency, so I worked there for a bit, and then went off overseas, did a bit of an OE, came back and went to uni as an adult student. So ripe old age of 21, I think I was an adult student, had to sit in the front of the class and be annoying and ask all the questions.
Of course,
like, part of the deal for adult students. And at that stage, I ended up studying economics because I found it really fascinating, just the, thinking about how the world works through the lens of value and money, and tacked on a finance degree in my last year just so I'd have something slightly marketable and employable. And then went into a job with a government agency, and then, career just sort of meandered from there. I've never really had a career plan, but one thing that I did learn from, looking back on my career is that I kept moving into roles that I found interesting and following a path that, taught me new skills, let me uncover, some new area of knowledge and expertise. And that set me up really well for being, where I eventually found myself as CEO of a startup, because I'd picked up all of these wide-ranging random skills along the way just by following my nose of what was interesting to me.
So leaving school at 15 for someone who's clearly bright is a relatively unorthodox path. So what was it that said to you that I should get out of this kind of, industrial age education environment? That's my thinking rather than yours. So don't use that if it's not the reality for you. But then what do you think that kind of delving into the workforce at a relatively young age kind of gave you as a skilled professional that you are today?
I have to say, I'm not entirely sure why I dropped out of school. It was probably just a little bit of I'm not enjoying this. Mum, Dad, can I leave school? And their response was, you can leave school if you have a job. And then the next day I came home with a job at a cafe and they're like, not necessarily quite what we were imagining, but, when I later asked them as an adult, I was like, why did you guys let me drop out of school? Because it is so unorthodox, right? It's not how you expect your kids to set themselves up for a good life. And, when you have the opportunity to go to university, the accepted wisdom is, stay through school, go to uni. But my parents said, well, we knew you'd turn out all right. And at that stage, I was working at PwC and I was like, can't argue with that. But it did give me a lot of things, though. And one of them, obviously, I learnt a lot of skills. I learnt work ethic. I learnt teamwork. I learnt, all of those soft skills. The hard skills of working at a cafe, not super great. I learnt how to put all of the filling of a sandwich along this line where you slice it so that it's just bare bread at the back and, good-looking filling at the front. Not the greatest lessons. But one other thing that it gave me that I think is possibly really underrated by people when they're thinking about the problems dropping out is it gave me income earning earlier in my career. So I started earning a full-time wage, albeit minimum wage, but I started earning a full-time wage at 15, 16. Most of my friends who went to uni didn't start earning at least nothing they could save until probably a good 7, 8 years later.
Yeah.
So it actually helped me buy my first house when I was in my mid-20s. And so it helped me get ahead financially, which I think is not necessarily something to be underrated.
Yeah, it's interesting. I had a myriad of different jobs through. I started working when I was 12 for money as a paper run, and then that kind of. Oh, you had the paper run? Yep, cool.
I spent all of that on chocolate fish at the dairy, though, so no savings there. Yeah.
I was lucky enough to be of the age where the stock market was going through a boom, and my stepfather was very insistent that I put a decent chunk of that into that market, and so there was an absolute bull run that was happening. So I had the really great fortune to ride a market high when I was 12, 13. And then it crashed when I was about 14 years old. And
Good learnings both ways.
Amazing learnings both ways, because I did make a whole bunch of money. I didn't take any of the profits out, luckily. Unluckily, I should say. But I went back to the position of my original capital. So I didn't lose everything, but I lost a lot of the gains. So it taught me so many lessons. I ended up working at KFC as like a 15-year-old, I think it was, and I had a couple of 3 years. And I laugh because one of the skills that I've retained since then is the ability to bread chicken, like really quickly. So I know how to get a whole bunch of chicken or things, breaded before you put them into the oven, or to deep frying fish, or that sort of thing. One of the other things that I took away from that environment was knowing how to work in a team, which I think was super, super valuable. The ability to understand others' behaviour, what they might need, helping to set them up for success, communicating clearly, all those sorts of things I think were really, really super helpful and valuable. Do you think that knowledge and awareness of money gave you an ability to kind of look upwards and out? Because 2014 in crypto was still relatively, it was actually really early. 2011, Satoshi Nakamoto, I always get the name wrong, wrote the white paper. People got in early. They didn't really. They like to say that they did, but 2014 is really early. Do you think that it gave you the ability to kind of environmental scan and have an awareness of what was going on in a variety of different spaces, or was it kind of happenstance?
I think it was probably, having done a degree in economics, I was just fascinated by the way that money works and sort of the global monetary systems. And so I think, that was, I remember my main thing when I came across Bitcoin was here is a massive dynamic changer for global money systems. It didn't end up working out that way. It may still, may not. But that was probably the thing that drove my interest in it, was just sort of my fascination with economics and, how human civilizations have morphed the idea of money and value over time.
Yes. So You started Easy Crypto from a hammock in Bali, is the backstory that we've dug up?
Yeah, so my brother and I, so this would have been, the very end of 2017. So, we talked before about how I was giving all these presentations about crypto. Everyone's asking me how you can buy it. My brother was having the same thing with his friends, wanting him to buy for him. And he was traveling through Southeast Asia at the time, and he'd never coded before. So the first thing he did was Google what language are people coding in these days. Then he sits down to write this website, learning to code as he goes, and he puts it live on the internet 5 days later. And so, I highly recommend having a genius as a co-founder. It makes your life so much easier.
No doubt.
But he's a genius in some regards and very, very stupid in others. So, he had this thing that he'd put it live on the internet. Random strangers were putting cash into his bank account for him to buy them magic internet money. And he tells me what he's done on about day 5. And I was like, whoa, dude, you need to take that thing offline right now. Please shut down that website. Do not take any more money. Let's assess the damage before you go any further. So he brought in, this great, way to solve problems. He's an amazing problem solver, but doesn't necessarily think about the wider impacts of things like regulation and tax and customer service and marketing and accounting and all of the things that you need to wrap around a great idea to turn it into a business. So that's when I came in on about day 6. And so, he was in Bali, just traveling around, living his best life. I was in New Zealand, still sort of earning the paycheck, and together we built the business, just the two of us, over the first couple of years before things really started to snowball.
You bootstrapped from the outset. Did you consider fundraising early on, or was it always something that you were intent on kind of keeping the management, the control of the business in the early days?
We weren't super intentional about it. And looking back, I'm really glad we didn't raise funding earlier. We did try, though. And one of the things that I've sort of, my advice to younger startups is to really think carefully about if you want to raise funding, if you need it, and when the right time is. Because I think we sort of celebrate fundraising as this great thing in startups and business, and it's almost like the white picket fence of business life, right? It's just what you do. It's the traditional step is, you start a business, you raise some money, it's just the done journey. Whereas I think it's important for people to challenge that and go, is that the right journey for me? Do I want the white picket fence and the 2.5 kids, or, is there a different way for me to do this? And so for us, we did try raising at sort of angel or seed stage. We kind of got laughed out of a few places. People were not into crypto. They thought it was some weird, crazy thing. I remember one company saying, we only support SaaS businesses. And I'm like, what do you think I'm selling? I'm not making shoes or widgets. But that's on me. I obviously hadn't explained us well enough. But it turned out for the best. So we just kept bootstrapping. We, whatever money we'd made last month, we'd go invest into marketing and wages and stuff this month. But it did make it very hard for us to forecast forward because our revenue is so volatile. I guess in that respect, we're not a SaaS business. We have, it's very hard for us to know what our revenues next month are going to be. So taking on staff, committing to long-term expenditures, that kind of growth was difficult. And so, we ended up raising in 2021 to take the business global, to invest more into redeveloping our tech and to really try to do a big expansion play just before the markets crashed.
Yeah, right. In one aspect, really good timing, and another probably quite challenging because you've got please explains to investors. You famously raised, I think it was New Zealand's largest ever Series A round?
Largest first funding round, because we hadn't taken angel or seed investments. We went straight into what was a Series A. Looking back, I was like, we were so naive in many regards, and also perhaps there were a few things we should have been asked during that process, which we weren't, but yeah.
So what changed when you took all that 15 million, I think the number was, is that correct?
Yeah, 14.4 million, and then we followed up with a convertible note not too long after.
So it was a big number that you brought into the business. What changed from that point forward?
A lot. I mean, for starters, we brought on an external board, which was great. So we had governance and, I've actually really enjoyed working with the board that we've had. I was quite cynical about boards coming out of corporate where boards never read board papers, asked stupid questions, didn't seem to add value, but I really enjoyed the board that we had. We also hired a lot more staff. So we went from I think we had probably around 30 staff before the raise, and within the next 6 months, we were over 100 staff. So it was a huge increase. Obviously, a very big increase in spend goes along with that. And also just an increase in the breadth of what we were trying to do. And we were trying to do a lot. We were expanding into new countries, rewriting tech stacks, looking at, changing our strategy quite significantly. There was a lot. And it went from quite a simple business to a very complex, large business in quite a short space of time.
Yeah. So that's a lot of different fronts that you're kind of fighting on at one point in time. And I'll go back a step to the point that you made about founders should think carefully before they raise money. What are the downsides of raising money early in your mind, and the risks that founders should be aware of if they do take on, a reasonably sized check at the start of the journey?
I was on a panel the other day with Jovan from Emerge who made the comment of raising $12 million. It's not $12 million, it's 12 million promises. And I think, that's really how you need to look at it. And one of the things that I didn't realize before I raised, but found out afterwards, is in a country like New Zealand, when you raise, kind of everyone owns a bit of your company. I think I worked out that we had something like 1,200 individual households invested in Easy Crypto. I'd go to barbecues and people oh, you work at Easy Crypto, I'm an investor. And so it kind of takes it from being, investment is not this arm's length, sort of dispassionate, numbers only, sophisticated investors just looking at, playing the game on the returns. It's actually, real people you meet at barbecues who are taking a part in your business because they believe in you. And so it's this huge responsibility and, it's a big obligation, and it really changes the dynamics of the business because it's no longer just me making decisions for what I think is in the best interest of my team and my customers. I've got to think about my investors, and it's it's a really significant change.
Yeah. I think in a market of scale, let's talk about the United States as a difference. You're probably going to be anonymized to the people that are investing inside your company. But in New Zealand, you're going to have this inevitable kind of overlap with people either socially or through business or that sort of thing, which creates a contract of trust, and expectation comes with that as well, which can make it a little bit difficult if things don't go the way that you anticipate things to go. But you took this money in, you had this accelerated international growth, you rebuilt the tech stack, you did so many different things. Did that journey and the growth that you had anticipated and was a part of the slide decks, did that play out in the way that you hoped that it would over the next kind of year or two? You said the market crashed quite quickly, so what happened after that?
Well, you know what they say, everyone's got a plan until you get punched in the face. And I think for us, 2022 kind of punched us in the face in many regards. So we had, tech stock valuations collapsed, the crypto market collapsed, went into a massive bear market, a crypto winter, same thing. We had, companies globally going out of business quite spectacularly, things like FTX and Luna. We had all of our crypto competitors in New Zealand actually went out of business over that year and the next following years as well. We also had massive challenges with our planned expansion globally, where we had regulators sort of changing rules overnight. One country that we were partway through moving into actually effectively outlawed our business model because they were trying to make crypto match the business model of a stock market, which doesn't really work super well, definitely not for our structure. And so we had all of these headwinds, all of these massive challenges. And we'd ramped up our costs. We'd hired our team up to over 100 people, and then our revenues just plummeted. And it was a very challenging time.
Yeah, ouch. As a exchange, I understand the business model is you conduct a transaction and you take a fee as a percentage of the transaction. Is that correct?
That's right, yeah.
Okay.
So for us, it doesn't matter so much what the price of crypto is doing. It's more around the volume and how many people are trading. But 2022, the volumes just dropped off crazily. We were down to a quarter or a fifth of the kind of trading volumes we were doing the prior period. Yeah.
So if you look back upon the start and then the raise, so the start was in 2017, the big raise was in 21, and you think about the timing, and we'll come to the exit in a moment, but you think about the timing of those things. Do you think that you kind of got those bits of timing right, or do you think that you kind of are a little bit awry? Nobody can tell the future at that point in time, obviously, but what do you think from a timing aspect?
It's a really interesting one because we launched in 2017. We launched in December 2017, which was pretty much the peak of that 2017 bull run. And so from some respects, we couldn't have launched at a worse time. We literally went into market and then within 2 weeks, crypto prices just plummeted. However, it gave us the time and the space to build a really solid base, to build a really good user experience. And because we weren't completely flooded with customer demand, we could focus on the product. And I actually think that was really helpful. In terms of the raise in 2021, if we had left it later, we probably couldn't have raised. I don't think anyone would have wanted to invest in crypto in 2022. But at the same time, should we have raised, or if we just ridden that period out, kept the cash in the bank and made smarter, more sustainable choices around hiring and expansion, perhaps we'd be in a different position now. So hard to know though. And you you can't really revisit these things. But it was definitely interesting timing on both of those, looking back.
Yeah. And when we have intentions and the world conspires against those intentions, it can be hella stressful and very, very difficult. Did you find yourself questioning the decisions that you'd made? Kind of, how did you rationalize the path that you were on? Did you think about kind of pivoting in any way? Or were you like, no, we're going to stay this course. We believe in the asset class. We believe in the space. To what extent were you kind of like unsure and getting a bit shaky on the direction that you were taking?
I think the international expansions was something that I definitely, felt that things conspired against that, and the timing just wasn't right. Like, when no one is talking about crypto and no one is interested in it, it's not the time to go and try to push into new markets and achieve new customers. I had a really, in hindsight, really good challenge from my board in late 2022. They said, you've got to get the business back to cost neutral. So hard. Like, worst thing I've had to do in my career is to, cut costs in a very, staff heavy business. It was really hard. In hindsight, though, it was the right thing. And at the same time, I was going through a process of looking at, what we've been doing to date. It's worked, but going forwards, we need to pivot. We need to find new things we can invest in. That actually led to us building a cryptocurrency wallet, a self-custodial wallet, and also a stable coin. So we were really, I was actively looking at where can we expand the business into, where can we find white space, and one of those being, at the time, crypto wallets, or the ways in which people interact with cryptocurrency was very much not user-friendly. But there was just the start of green shoots of some tech changes that under the hood could be used to make better experiences. And it's really good to see how much the industry's changed in the last couple of years in that regard. But that was something I really wanted us to take our focus on user experience, on making things easy, wider than just the buying and selling process.
Yeah. So essentially, over that period of difficulty, you had continued dialogue with the board, indirectly with investors. You maintained the direction that you were heading in, but you took the opportunity to trim some costs out of the business. So, prudent, smart cost control, but also you were aware of the bigger trends that were going on and then innovated and brought different things into the market during a period of quiet so that when things rose again, then you had a better business than what you went into it with. Is that correct?
Yeah, and it was actually a really interesting period, that sort of that innovation that I came up with. The board initially, it's not that they didn't support me, but it's just that they were like, we need to cut costs. This is not a time to, we love that you've got this great new idea, but no, this is not what we're doing. We need to cut costs. And we actually at that stage looked at selling the business. So what I ended up doing was developing one of the new products myself under my own company, paying for it with my own money, completely separate to the business, with an agreement that I would sell it back into the business should we not sell, and should the board decide that this thing that I'd been working on was a good idea. So it was kind of like I almost had my own skunkworks outside of my company to develop a product that I believed in and I thought we should be backing, but without that confidence of the board that was the right path to go down. Wow, it almost felt a bit Silicon Valley. I was like, what is going on here?
Yeah, totally. Almost a bit Elon-esque, doing two different things at the same time, which but both of which were in challenging environments and unproven at that stage as well. Yeah. That's a degree of conviction that is relatively unusual for people, for you to back it with your own money and just have that kind of certainty. Do you have a decision-making framework that you go through when you're unsure about something, or do you have a strong gut that you trust, or is it having conversations with the network, or all of those things, or something different that you do to test on? Because innovation requires taking risks and doing things that others are not doing, and those create uncertainty for us because we don't have any reference points or touchstones that we can refer back to. So how do you know that you are doing something which is the right thing to do?
It's a really hard one. Like this one in particular, it came from, I'd been at some crypto events and sitting in the audience listening to people talking about sort of the user experience, and then, at a different event hearing all about the technical innovations that were happening. I was just in my head, I was like, I know the user experience pain points so well. Like, I am so across those. And hearing the technical changes, I was like, hold on, if we stitch these things together. So I just really felt that I'd nutted on something that was actually super important and like would help solve these problems. So I had a real strong conviction, and I guess it's a gut thing. What I learned though is that I possibly learned some bad habits through our first version of Easy Crypto, in that, you know, a lot of people have all these frameworks about when you're starting a business, you need to like do this to test product market fit, you need to do this, that, all of these things. We didn't do any of that. We're just like, here's a problem, we need to solve it, we'll build this thing, how do we make it better, how do we make it easier? There wasn't any rigor around the process that we went through, and we just lucked on this market niche that ended up being really successful. So when I had the second idea, I was like, here's how I think it should work. Here's how I see the problem. Here's what, and I stitched it all together, and I did 0 user testing and ended up getting my team to build, you know, by this stage, we'd moved it from, you know, it was no longer with an external outsourced. It was now brought back into the fold. And I got the team to run down a couple of avenues that if we had put it in the hands of users and tested it, we wouldn't have built those. And, you know, the core product was still good, but there were some of the ways that I'd sort of envisaged it that weren't good when they met reality. Yeah. And it did take us a while to unpick those and sort of undo the damage I'd done. So it was a good learning for me of like, yes, sometimes following your gut and just doing a thing because you think it's the right thing is good, but sometimes you do also need to road test it and battle test it before you just like pump ahead with your own convictions.
Yeah, it's hard to find the balance, hey, because if you talk about like a corporate, and you mentioned Westpac, you know, that's as big as businesses really can get in this part of the world. And so they tend to have things like guardrails in place to protect themselves from regulations, to make sure that they have effective checks and balances, probably a lot of ass covering as well, so that if the decision gets made and it's the wrong one, then you can point to the process and say that we followed that process. A good example, actually, I won't mention the name of the bank, but rather a bank. A friend of mine worked at one, and they discovered that they were spending $250,000 to get a business case approved. And so this would be to do a POC, you know, proof of concept, or a pilot. And so pilots somewhere between 25 and 100 grand, depending on what it is that you spend. So in some instances, they were spending 10x just to get the business case run through. So their decision was to scrap business cases if it was less than $100,000 and just go ahead and do it, because it'd be cheaper to do the experiment and see if it would work. And so it's a real kind of balance that you've got to strike, hey?
Yeah. And also the thing of like, do users really know what they want? Like sometimes if you're taking that step ahead and innovating, and you know, I was building something that we didn't really have. What I come up with didn't exist at that time, and it's like, can you really ask users, do you want this thing, when they don't have a mental model for it? And you know, it's the faster horses kind of conundrum. But I believe more in user testing than I did before, and I think, you know, definitely you need to bring some of it in, but just be wise about it, because if if everything you do just depends on user testing, you'll only ever get small iterations on current. You'll never get those step changes and those big step forwards.
Yeah, 100%. Yeah. So timing-wise, if we jump back into the investments had been made, you'd been building the new features and kind of product things, and then my recollection is, backstory, I've been investing dollar cost averaging in crypto since 2017.
Excellent.
And it's a, great asset class for me. It's been a set and forget thing for me. Yeah. And so same amount of money every single week. I've just tweaked the ratio of the different coins that I buy. Don't buy any of the weird, wonderful NFTs, the coins that have popped up out of nowhere, the meme coins, those sorts of things. I just buy the standard 3, Solana, BIT, and ETH. And so my sales strategy, this is funny, is that I have sold along the way, and it's been if my mum or the guy at the cafe or someone random starts talking about Bitcoin. I used to trade derivatives back in the early noughties, and so I've got some technical analysis chops, so I'll just jump on and do some technical analysis and go, this feels like it's kind of at the point that it might be peaking out, read a little bit of news, and then I sell some. Pay the tax, and then off we go onto the next thing. It's worked super well for me. But as a consequence, I don't look at the market on a day-to-day, not even a week-to-week, not even a month-to-month basis. I'm just aware that it's out there. I believe in the asset class. So my recollection is that it was late 23 that things started to really pick up again, and then we had that massive run into 24. Is that timing about right?
Yeah, so early 24 was when the Bitcoin ETFs got approved. So there was definitely a little bit of a rally in the market then. The whole of 24 was better than, say, the previous year had been. Yeah. But actually the biggest positive time in the market has actually been just in the last few months. So sort of October, November 2024 into the start of 2025 has been a really good time in the market as well.
Yes, okay. And so at what stage did you start pondering the notion of an exit? You mentioned that you thought about selling it in 22, 23, but then you got serious about it in 24, is that right?
Yeah, well, actually interesting that you should talk about, the market run at the end of 23, because that was when we started sort of thinking about this. We're looking at the market. We believed the market would come back in 2024. Trying to sell a crypto business in a bear market, no good. So we're thinking we want to time a potential sale with a bull market. And the other things that were sort of impetuses behind the sale is we were seeing a trend towards mergers and acquisitions in crypto. You've got these small individual regional players like ourselves. They're going to start merging and morphing into larger global players. We wanted to be sort of at the front end of that trend. And we also had a push driver from the other side of massively increasing costs. So we've had huge changes in regulation and a lot of increase in compliance costs. We've also got a lot of, huge amount of cost on security. That's always a really important one. And then the complexity of crypto itself has been massively increasing, and that drives costs. So we sort of had this, massive headwinds, I guess, for costs for the business, plus an expectation of a trend towards more amalgamations, and sort of thought 2024 is the right time to explore that.
Yeah, great. And so you engaged an advisor, I believe, an investment bank, to go through that journey. So what was the start of the conversation like, and what did they make to you as suggestions as to what you should do with the business? Talk us through the early stages of that journey.
There was so much hope in the early stages. We went out to market to look for an investment banker first, an advisor to work with. And actually through that process, we ended up, meeting a couple of companies who we weren't the right fit for them, to work with them, but they had clients, buy-side clients who were interested. So when we eventually chose the firm we worked with, who was Areta, they're a Web3 specialist firm based out of Germany. They were fantastic to work with. But when we started with them, we're like, hey, we want you guys to run this process. We've got a couple of hot leads already. So we had sort of 3 names that were interested, engaged, actively looking to buy. And so we all thought going on this process, like, we'll be done and dusted in a few months. Like, a couple of months to a term sheet, 3 months will be in DD, done, 6 months will be sorted. All up end-to-end, the process took 14 months.
Okay, wow.
Way longer than I think it needed to. But at the same time, those delays did actually result in some upsides for us. And, we did make sure, I guess, that we'd had, it was a very robust process. We got the best price out in the market, and we also managed to get the uplift from the last couple of months of cryptocurrency being, in that nice little bull run towards the end of 24.
Yeah, lovely. Apologies for the interruption, and thanks for listening to the show. These shows take resources to build and put together. We have a team of producers, we have some promoters behind the scenes, and of course we have the guests that generously give their time to come on the show. My only ask of you is that you go and check out my website. I advise founders on how to build value and how to navigate the exit process successfully. We have a diagnostic on the website. There's an ebook that I've written. There's a free chapter of my upcoming book, Wantrepreneur, on there. So I'd just urge you to take a couple of minutes and go and check out joshcomrie.com. So the successful buyer, did you have multiple at the table, by the way? Did you have parties that were kind of not in a bidding situation, but you had people that were multiples along the journey?
Yeah, we had at the start, we had a few offers and a few engagements, and then, this was, of the offers we received, this was the best offer on the table.
Yeah. To the extent that you're able to share, and it may be a multiple or it may just be a kind of a relative sort of number, the asset space has been relatively volatile. So how did they go about valuing the business?
It's definitely a very complex one because there aren't a lot of listed equivalents in our business. You've sort of got at one end Coinbase who sit at like 11 or 14x, and at the other end Wonderfy who sit at a 1 or 2x. And so you've not got a lot of comparators to work with. So there was, a huge amount of work went into the valuation, the due diligence, the sort of assessment of the two companies and their relative strengths and weaknesses and balance sheets. And to get to a place that we could say, look, we think you're worth this and we're worth this, and therefore this is a fair deal going forwards.
Yeah, okay. And the Australian acquirer, what made it such an appropriate business for them to buy?
So they've always been interested in the New Zealand market, but never really been able to get a good foothold here. So for us, we offered them an expansion opportunity into New Zealand, a large customer base and sort of health and trading volumes. Definitely some opportunity for uplift from, taking our customers onto their platform where they have a wider product range. They've got different sort of trading mechanisms. So opportunity for, the sum of the parts to be the sum of the whole to be greater than the parts, if, you know what I mean?
Yes.
And also we, as well as bringing the New Zealand business, we recently acquired our license in South Africa. So we gave them, a bit more opportunity for international expansion, as well as a company that was, good cultural fit, really good staff, and just, overall a nice bolt on to their existing business.
Yeah. When people raise money, they're always interested in going internationally, but we tend to eye up maybe Southeast Asian markets, potentially Europe, definitely the United States. Why South Africa?
South Africa was one of our early businesses that we went into well before the Series A, but it actually started because we were working with a South African who had established, he wanted to set up a crypto business in South Africa, was using us initially as liquidity, then we sort of moved into providing the tech for his business, then eventually we merged the companies. And so when it came around to the Series A, we'd merged into one business with Australia and South Africa and New Zealand as our sort of trading posts.
Okay, got it. So Australian acquirer, they had endeavoured to do another acquisition before buying Easy Crypto, around about a year or so beforehand, and they had to unravel that. What can you share about that?
I mean, I've only know what's sort of in the public realm on that. So they'd merged with Superhero, which is like the Sharesies equivalent in Australia. And then, like I talked about with our experience after the Series A lot changed in the crypto market with, collapse in crypto effectively, but also huge changes in regulation. And I think the combination of those things made the merger untenable, or at least, there was a decision between the parties that they were better off separated. So not a common thing to take place. And I think not something that we're worried about in this case, because we're very similar businesses, similar business model. We're in the same industry. I think there's good cultural and values alignment. So yeah, I don't think we'll be sitting here in 6 months with a demerger having taken place.
Yeah, okay, I hope not. Yeah, and there was no Comcom issues along the way. Famously, Serato, around about 15 months ago, was blocked by the Commerce Commission, and it's actually a really interesting deal. I'm not sure how much you've been exposed to it, but
no, it's been fascinating to watch that one, and also really sad for the Serato guys.
Actually, it's worked out completely in their favour. So the deal was quashed around about a year, give or take, maybe 15 months ago, and so they went away and continued to run the business, and so the business has prospered and thrived in the background. And just recently, they've done a deal to sell a part of the company for more than the original total sale price.
Oh wow, that's fabulous.
AJ's coming on the show in a couple of weeks actually, so he's a good friend, so he's going to tell that story, which is going to be an absolute riot of a story. But did you have to go through the approval process for a international acquisition?
I just got to say, I'm so pleased for AJ, because that kind of thing, like seeing that deal fall over, knowing how much work and sweat and pain and tears you go through to get a deal to that stage, I was just devastated. So it's so nice that it actually has all worked out for the better. And we had a similar thing actually, because we'd gone through the process with this was actually our second buyer. And, when the deal with the first buyer fell over for certain reasons, devastating, because you put in so much work to get there, but then we ended up in a better situation. And even the length of time that this deal has took, we've ended up in a better situation. So I think there's always a bit of hope that, whatever's happening, hopefully it all works out for the best in the end, and, the pain is worth it on the way. In terms of the Comcom, it was something that was a concern of mine, and I talked to my legal team, because, we're really the only cryptocurrency business of any size in New Zealand. There are international competitors, so it's not like we are the only way for Kiwis to buy cryptocurrency. But, it did concern me that this might be an issue. It hasn't worked out being an issue, and I think the fact that we are not a monopoly for New Zealanders, there is, global providers as well, means that it wasn't such an issue.
Yeah. And so you've mentioned the culture as being an important part of the deal, the evaluation, and it'll play a big impact upon the success of the acquisition as well. Do you think that had any influence on the multiple that was paid?
I don't think so. I'd love it if it did, because I'm a big believer in culture, and it's been one of the things that's been super important to me in my journey, is building a culture that people like showing up to work, and that it's not a drudge to have to turn up on Monday, and to make it a really good place to work. I would love it if that factored into valuations, but I think valuations, to be honest, are just based on revenues, EBITDA, hard, cold numbers. So,
Okay.
But it did factor in for us in terms of who we would sell to. Like there are certain, global exchanges out there that I know would be a terrible cultural fit for us. And so we wouldn't have accepted a buyer that we thought would be just a really bad cultural fit because it just doesn't work, right? Yeah. You can look at the numbers, but if if the thing's going to fall over, if, a year in, it's not worth that.
Yeah, good on you. Remote workforce, largely, in Easy Crypto. And so culture becomes a concept and an idea that needs to be talked about, nurtured and developed pretty well. How do you do that with a remote workforce?
It's really important to be intentional. And so this was something that, from the first staff member that I brought on board, I've been really intentional around how do we build a culture? Because, I personally come from corporates where, you may be in person, but some days you're just like, I just can't face going into work today. It's just soul destroying. And I'm like, I do not want to be a destroyer of souls now that I'm a CEO. And so we built culture really intentionally. We had values really, really strongly as part of what we do, and they're values that were really impactful and meaningful to us. We find ways that we can engage that build connection because most of our staff, we had a big trip to Bali 2 years ago. Prior to that, the majority of our staff had never met each other in person, and yet we'd built this culture that people love coming to work. They got on well. They really enjoyed their workmates, super supportive, a lot of fun, and all of that was online, and it can completely be enabled online. You just need to use the tools that are available and figure out the right things that work for your team. So for us, a lot of it was we all live on Slack, and Slack's, not just for formal things. There's a lot of informal communications, a lot of chat, a lot of taking the piss, taking the mickey out of each other, a lot of, just, not work-related stuff, the kind of water cooler conversations, we have them on Slack. We also make sure that we have meetings that everyone in the company comes to, that everyone gets to see what others are working on, one-on-ones to help build rapport and relationships. Even small things like when we have meetings, we all have our cameras on and we're all in our laptop cams. You're not got, I don't know if you have meetings with perhaps other companies and everyone's sitting in a meeting room and they're at the far end of a room and you can't even see their faces. That doesn't help build connection, whereas having these close up and personal laptop cam conversations, it just helps you feel that you're connecting with the person on the other side of the screen as much as you can whilst not being face-to-face.
Yeah, I love all these ideas. You've done a number of webinars over time, as I've done as well. And that situation where people go black screen is just so awkward and so weird. And it feels like distant and like you've been on a big stage before and you've got those bright lights shining in your eyes, but you get the energy when you're there in person and a crowd has an energy about it. Whereas it's quite difficult to develop and maintain that on an online format. And it just becomes the antithesis of creating positive energy if people go black screen. And so for those that are listening out there, if you are in that situation, leave your cameras on, please, because it makes such a massive difference to the person that's at the other end. Yeah. Otherwise, you feel like you're speaking into a bit of a void sometimes.
100%, yeah.
Some of the things that I really like, and I'm curious about what else you've done to bring the values to life, is that I always advocate to companies that values go on the wall, but how do we make sure that they come into the vernacular of how we live and operate as a company? And so a values award is a really simple thing where each other calls the teammates out for living into the values in a positive way. Yeah. It's like a positive values thing. And so what my wife Tina does in her business, for example, is everyone gets allocated a certain amount of points and they can distribute those points to whomever they choose on a Friday afternoon. A glass of wine typically happens, and they call each other out positively and award the points and say what the action was that happened and what value it relates back to. So every single week there's a reiteration for the company of the 4 company values that they have. It's a really positive way to do things. I've got another buddy that has a thing where they do the wooden spoon of the week, and I think they call it the turkey of the week. And so they have a bit of fun with it too. And so it hasn't become a thing where people are named and shamed, but rather it's more of a fun, you made a bit of a boo-boo, you did something dumb. And my buddy Tim in that company, he kind of calls himself out quite regularly and encourages his EA to do the same thing for him. So it's made like this really inclusive, fun, jocular thing inside the culture. Are there any kind of touchstones that you had that could be quite helpful for people to go, that sounds really cool, I'd like to do that inside my business?
Yeah, I mean, a lot of ours are built around remote business. So we have things like we have a Slack channel called Living It Shoutouts, where everyone's encouraged to just give a shout out to someone who's living the values. So we'll say, shout out to so-and-so for living this value, and then, talk about it a bit. And so those will be rolling in, like every day, every couple of days, people will be doing shout outs. And it also means you get to understand what other people are working on and appreciate what's going on around the wider business. And then those feed into our awards that we do at our monthly team meetings. We'll sort of pull from those as our nominations for awards. We're also big fans of emojis. This, genuinely came up as one of the first questions from my team about transition. Will we be able to transition our emojis over into the new workspace with the buyer? And I'm like, we'll make sure it happens because, we have probably one of the largest collections of custom emojis in the world.
Love it.
But we have a lot of emojis that are about the values. So we've got like a series of, values emojis that get, slammed on all the time when people are, doing stuff. They'll get a reaction in Slack of like, got your back or make the path, depending what the emoji, what the value is, which is really nice.
Yeah. Emojis are so interesting. I'm of the demographic, which means that I came to them, I was relatively mature by the time they became a bit of a thing. And I was at a talk where someone said that if you don't think that you've learned another language in the last few years, think again, because emojis have become a true global language, like a unifying language. And there was that television show, Adolescence, that I'm not sure if you caught it, that was on recently. And it was a whole new level of emoji understanding, unfortunately in the negative context about using things to diss other people and to be really critical of whatever space they're in. And so it's a really interesting evolution in anthropology and psychology about how important emojis have been. What was your favorite emoji that the company made whilst you were there? Because I love that you had custom emojis.
At one point, there was a set of emojis made of the values, but using my dog as an emoji. So it was like, how you can take an emoji and you'll put like the glasses on it or make it bounce or make it, put it on fire. Like, so yeah, my dog was a little emoji mascot at one stage. And also we have, I think emojis are another language and then memes are another language again. And there's a lot of meme emojis and like, learning memes is, definitely learning another language. And there's a lot of them in crypto.
Yeah, absolutely. Well, there's meme coins. Tell us about meme coins for those that don't know about them.
Oh, goodness. I've written quite a bit on this recently. So meme coins have, they're coins that have no value, no purpose other than speculation, and quite blatantly so. And so they're typically around a meme. So Dogecoin was the first meme coin, but there's been a whole lot that have sprung up over recent time. A lot of them very much go into the more basic elements of the internet. I actually was quoted in Cointelegraph this week talking about Fartcoin, which is one of the many meme coins which has mooned in recent years, and a lot of people have made a lot of money on Fartcoin, Dogecoin, other meme coins, and that's some of the more safe for work ones. It's a really interesting. It's where I guess the internet is such a great exposer of human nature, and there's all of these elements to human nature that, we really love humor, we love dirty humor, we love the ridiculousness, and a lot of that comes out of meme coins, and, they are a very, a legitimate type of cryptocurrency, but very much a do your own research and don't invest more than you're willing to lose because they're entirely speculative and, very, very bizarre.
Yeah, they are a little bit weird. It's something that I've certainly avoided, along with the NFTs as well. We were talking earlier about the use cases for Web3, for the blockchain, and meme coins is one, NFTs is another, crypto is another. What do you think, looking over the next kind of, foreseeable horizon, 12, 24 months or so, and then maybe the long term, but let's talk about the near term firstly, what do you think is going to be some of the big trends that are going to be happening in and around Web3 over that time frame?
So I think in the short term, stablecoins I think are a really big next wave of Web3. So stablecoins take the benefits of blockchain. So they're fully digital, they're 24/7, real time, very low cost, instant. But they are pegged or tied to an underlying asset, like, for example, the US dollar, the New Zealand dollar. So they let us do what we do now with money, but do it better. So they don't have the volatility that you have to worry about with Bitcoin and other crypto assets. And so I expect we'll see stablecoins start making large inroads into institutional trading, into things like foreign exchange, cross-border transactions, but over time also coming in and replacing how our banking system works, because our banking system is still actually quite archaic. It's quite analog. It's paper-based, whereas, cryptocurrency, digital assets, it's kind of like programmable money. So imagine being able to program your money to do what you wanted, when you wanted, automatically. Like that unlocks a huge and interesting realm of financial products and services.
I'm really interested in the space where we move into with assets, like property assets as a good example, like, real estate property assets being registered and then being traceable and tradable based upon Web3, because it's such a logical thing that it sits in that environment where it's immutable, it's verifiable, it's something which people can trace and look at. Those are what those words mean, and so it's interesting that it's taken a while for traditional assets to move into that space. Why is that?
I mean, I think you've got a lot of inertia in the systems, because you're right, like putting property on a blockchain or on a digital ledger makes so much sense, right? At the moment, it costs, I don't know what, $2,000 if you want to get a lawyer to help you buy or sell a property, because they've got to go and file paperwork with Land Information New Zealand and this and that. Like that should all be like a simple online form, verification of ownership, who you're going to trade it to. Like it should all be done super easily and like at very low cost. But we have the systems existing today are very old school. They're paper-based systems. Records have started to be digitized in terms of scanned and put into a computer, but they're not digital. And so you have this big step change that needs to happen to take our, current frameworks of asset ownership and actually put them into a digital format, which we can then start interacting with them digitally.
Yeah. So would I be correct in assuming that you remain kind of long on Web3 and crypto as a space, despite selling your business?
Yeah, absolutely. Like I think there is no future in which financial products and services don't turn digital, right? Yeah. When we look at what the internet did for information, it digitized information, and now we can have this kind of conversation and broadcast it to people. We can go home, I can order an Uber to get home and then, order some HelloFresh for dinner. Like all of these use cases, products, services that digitizing information enabled for us, that is the revolution that's going to happen with digital assets. And we can't really picture now what we're actually going to be able to do with it, just like we couldn't picture any of these things, say, 30 years ago. Yeah. But I think once assets can go digital, financial products and services can go digital, that is a huge range of new things that will be opening up. And that's where I'm really bullish. Is that Bitcoin? Is it Dogecoin? Is it Trump coin? That's a next level of detail down, and I can't predict that, but I do predict that, we will be digitizing much more than we have to date.
Yeah. I remember we had a conversation around about a year ago, and you were talking about having done a webinar and how the questions that you were fielding at that stage were spookily similar to the ones from 3 years ago. What is this asset class? Is it safe? How do I trade it? Will it get stolen from me? All these types of questions. And so my sense is that, and in fact, the numbers, you had 350,000 customers, I think, at Easy Crypto. That represents, let's call it 10% of the population that would have the ability to have some assets, of any form of age, but it's probably proportionally a lot larger, because I'd imagine that baby boomers are not really terribly exposed to this kind of asset class.
Oh, you'd be surprised.
Okay, okay. Actually, tell me the data. What are you able to share?
So it does skew younger, but we do find that we have a huge range. And one of the things that I found interesting is our younger demographics skew more male, but as the cohort gets older, it's much more 50-50. So our baby boomers, for example, pretty much 50-50 male and female customers. Yeah. And one of the things that I found interesting from talking to them is a lot of their rationales for buying crypto. Like younger people sort of like, look, I can't afford a house. I'm not going to, be able to get, on the ladder and whatnot. So they're looking for a new investment class, a way to perhaps get ahead. Mid-range are looking for more diversification. Like you and I, we're like, cool, we've got a bit of our portfolio here, a bit there. But some of the older customers have this distrust and dislike of banks that drives their interest in the sector. So they actually, more so than younger, often look at the philosophical underpinnings of owning your own money, not having it in the control of banks or governments, and this whole real, not quite anarchist, but ability to hold your own funds and not have them at risk. And because of their experiences of banks, calling in loans or governments devaluing money and, a much, more cautious view of our current financial systems and less trust of them, which is really fascinating.
Yeah. So do you think that investing, if we just talk about crypto specifically and the different things that represents, do you think that that is for a specific type of investor, or is it kind of, should everyone take a look at it and consider it? And to be clear, this is not investment advice, but I'm asking an opinion of Janine here.
Yeah, not financial advice, but I think it's worth looking at as part of a diversified portfolio. That's how I approach it, right? So like if you're in the position to be able to invest, which not everyone is, but you can look at, a lot of people have property, their own home might be an investment, stocks and shares, gold's quite topical at the moment. But as part of a balanced portfolio, cryptocurrency is a really good one. A lot of recommendations are around 5% of your portfolio into crypto. And it has, some ability to move differently from the rest of the markets, but really, I think the big value add for it in a portfolio is it's got more potential upside. It might not. It can go to zero, which is why you don't want to put your whole wealth in it. Don't bet the house.
Yeah.
But you do have that opportunity potentially for outsized upside. And balanced portfolios is all about taking different risk and reward portfolio, aspects across that portfolio.
Yeah.
And it's also open to everyone, right? So
Yes.
like if someone only has $50 to invest, that is an option. Whereas a lot of asset classes like property, you need so much more.
Yeah, startups, you need to qualify as a wholesale investor and then have a minimum $5,000, which for a lot of folk, rightly so, is a lot of money to be exposed. And I wouldn't suggest someone with $5,000 go and find a startup to throw it into if that's the entirety of their investment. I'm curious as to who you might follow. So I've not immersed myself in the ongoing education of it, but someone that I quite like the way that they articulate it is a guy called Raoul Pal. Mm-hmm. You've probably come across Raoul. He's shouting on the internet about this sort of thing, but he's goes very deep, but also relatively high level. And so this is a question for those that have heard this part of the conversation and go, I would like to learn more about this. What would be the steps that they could take, and maybe not Raoul, but what were the steps that people could take to upskill themselves and make a bit of a foray into investing in crypto?
I have to say, since I used to know so much about crypto, and then I started a crypto business, and I feel like I lost all of the time available for upskilling and learning. So I'm like, yeah, I've heard of Raoul, but I'm like, I don't actually know who else is out there that I should point people to. And maybe it's one for people to chuck in the comments, like, who is good in this space if you're new starting out? But also maybe for me, now that I've got a little bit more free time on my hands and I want to get back into, continuous learning and education, who should I be following? Like, what are the good people for me to get up to speed with to stay relevant in crypto and in, the broader tech space?
Yeah. Yes, put it in the comments. And there is a great episode of Diary of a CEO. Bartlett interviews Raoul Pal.
Oh, yeah.
And it's a really deep conversation that they go into, but it's at a level that those that are unfamiliar with the asset class can kind of, reasonably easily process. And he makes a pretty good case as to why it's something that you should consider. I love the 5% number, by the way, not investment advice, but rather just a bit of a dabble, because if it does change markedly, then you'll see some of the upside. But if it goes down markedly, then it won't feel too painful across your investment portfolio.
Yeah, absolutely.
You've talked about some extra time. So you've got an earn-out period. You're working, I think it's a minimum number of hours per week that you've got to work over a period of time. And so you're going to upskill yourself in some of these things that are around about the place. But how do you imagine the next kind of 6 to 12 months playing out for Janine?
I really don't know. My main focus is the transition, because obviously my team, my customers, we're going to be merging into SwiftX, into the buyer's entity. That's a huge process, and I want it to be very smooth. I want the team to be looked after, the customer experience to be, without any rocks or challenges. And so that's my main focus. And, how long is that going to take? How much work is going to be involved? It's really hard to know at this stage because we're such early days. So, but outside of that, I think I'd love to just take a bit of time to take a breather. Like, running a startup is such hard yakka, such a lot of responsibility, such a lot of pressure. And when you finally have that sort of weight lifted off your shoulders, you've got time to sort of stick your head up and look around. I'm like, what now? And I want to learn more. I want to, get curious, research what's out there, think about what's next. And, maybe later this year, next year, sort of get my teeth into something new.
Yeah. I experienced people continually asking me when I exited previous ventures and I'd had some time out, the first question people always asked me was, so what are you going to do next?
What's the answer?
Yeah. So what I learned at the first time that I did it is I didn't know the right answer.
Yeah.
And so I'm working on my next venture, to which they would say, what are you looking at? And the answer was true. I had a group of folk that I was working with, a mastermind essentially, and we were examining a variety of different ideas, putting them through business model canvases and evaluating the possibility for that business whilst building the business model or the idea of the business model in the background. Ultimately, that was how we came up with Ambit, the AI platform, the chatbot platform play, way back in 2017. That was
early.
Yeah, it was really, really early, almost too early in some respects. And so that was the legitimate answer at that stage. When I exited Ambit in 2020, early 2020, I was very clear that I was taking some intention time out. And I would say I am taking some time out and I'm going to recharge. Startups are brutal, right? As you well know, and that's what you've alluded to there. They're brutal and they're all-encompassing, and I faced burnout at that stage. And so I was very clear that I was going to just chill. And people would say, and after that, I'm like, I'm just going to keep chilling until I'm done with chilling. That was my answer. And so are you experiencing people asking you a lot, what are you going to do next?
Yeah, and I feel like I'm so unsure how to answer because, I am still working in the business. I'm also mentoring startups with the Ministry of Awesome, which is, I'm really enjoying that. And then, how much time do I actually have to chill to come up with new business ideas? I do suspect probably at some point in the future I'll do another startup because it was horrible. It was painful. It was the hardest thing I've ever done, but it's also so fun. And it's like such a great challenge. And it's so rewarding when you can see the thing that you've built and the problem that you've solved and that customers love it. And, it's a bit of an addiction, I think, looking at someone like you who's been multiple startup founders, I think once you get the bug, it's hard to turn it down.
Yeah. There's the notion of being a creator, and my version of creativity is identifying some form of problem that I can get passionate about, and then building something around that, building a solution and taking that out to market, acquiring customers, hiring people, building a culture, having a value prop, all the sort of things that make up a great business. And I really, really enjoy that journey. Personally, I like it from both sides now, which is the assisting others to go on that journey, alongside investing in other people to enable them to achieve the things that they want to achieve. And I've kind of gone maybe not another startup, in the true version of a startup, as in solving a problem that people don't know that they have, and in a way that hasn't even been conceived of before, the true startup, as opposed to like a glow up is what I call it, which is you're doing the new version of the thing that already exists, because the latter is it's not an easy business to start, but it's an easier business to start than the true startup, so to speak. And so, I think that you'll probably continue fielding those questions from people. What I've made it mean, by the way, and I'll tell you this, and I'm curious about your thoughts as I do, is that entrepreneurship is kind of celebrated and idolized, rightly or wrongly. It's just become that. It's now the number one career choice of high school leavers in the United States.
Interesting.
That and influencer, those two careers, which is such a contrast. And I guess you probably have to be a little bit entrepreneurial to be an influencer, and it probably helps to have some influencing skills to be an entrepreneur.
True.
So there's probably a little bit of rub up between those two things. And so people respect and admire those that can go out and build something from nothing. And what I've made it mean is that people ask you that question, what are you going to do next? Because there's a bit of them that gets like invested in that and they get excited about it, and they want to see you go on and do something new and different because they can kind of, watch and it's cool and it's fun and they've got some association with it. That's kind of what I've made it mean, why people ask that thing, because it's such an unusual question. Because if someone's got a job, you don't always say, so what are you going to do next? That's been my job for a period of time, and what about next? It's just I think it's the desire to watch someone observe, the challenges, the overcoming, the building, the excitement. That's what I've made it mean.
Yeah, it's an interesting lens on it, and probably quite right. And I think it is exciting to watch, people build businesses. And, I'm loving it with the mentoring I'm doing with Ministry of Awesome as well, watching people who are passionate about the problem they're solving and, have seen something that is needed in the world that they can contribute to. So I'm like, it is a pretty cool thing to watch in others. And I get why people would be interested.
Yeah. You've mentioned working with your brother a couple of times, Alan. And so how many other siblings do you have?
I've got one other sibling.
Yeah, okay. So 2/3 of the family is involved in a business together. And
my mum.
And your mum's involved? In what capacity?
So she's got an accounting background, so she's sort of our day-to-day accounts and treasury management, yeah.
Okay, cool. I love that. So what's it like learning with family, and what are the things that you have learned about how to make that work?
Yeah, it was actually a real surprise and a revelation to me how well my brother and I worked together in creating this business. So as kids, we're at each other's throats, and I didn't think we'd be able to survive as co-founders without killing each other. Being in different countries helped, I think, with that piece. But it was really great in that what we discovered is that we'd picked this business, sort of accidentally started a company that was a very good fit for our skill sets and gave us very complementary and not overlapping areas of the business. So everything that he was good at was stuff that I couldn't do. And everything that, was in my wheelhouse was areas that he was like, oh, I don't want a bar of that. So we didn't have a lot of conflict in terms of decision making because we had quite clearly delineated areas. Yeah. We also were very well aligned. I mean, I guess, you often have quite strong values and cultural alignment with someone you grow up with. So that was kind of an easy fit. And it's also really brought us closer together as siblings as well. And that's been a really nice outcome of the business that, we got on well before we started the business, but now we're really good friends.
Yeah, I love that. Tim, that I mentioned earlier on, a very good friend of mine, he has a very interesting dynamic in that his business partner is his best friend, and Tim is the group CEO of the company, and his business partner is one of the unit general managers. And so they've got this kind of triple threat situation that they're trying to navigate their way around. And how Tim makes that work is that he's incredibly clear and so intentioned about the hat that he has on for the purposes of that conversation. And so what he'll do is he'll walk into that conversation and he'll say, today I'm wearing my shareholder hat and we're talking about the investment and the direction of the business. And the next day it'll be, today I'm wearing my CEO hat and we need to have a performance conversation about your part of the business. So very, very intentioned. Yeah. And I love how he does that. And I've learned a lot from him in that context. We have some investment things together. So super, super helpful to navigate your way through those journeys. And so I heard also someone say about having a business with their brother. There was 3 brothers that started a business, can't recall which one. And he said that they were accustomed to fighting about things and then resolving those fights quickly. And so the consequence was that they could come in together and have some tension, have some conflict maybe even as well about whatever issue they were trying to resolve, but then they'd get over it really, really quickly because that was how they grew up. And so you mentioned that you fought like cat and dog when you were younger. So you're used to having that and then moving on to the next thing. Yeah.
And I just had to learn not to do it in front of staff. Like I remember in the early years when we had staff on, I would talk to Alan in a meeting the way that I would talk to him as my brother, not the way I should talk to my business partner. And so it was a good learning for me of, I should engage with him like a business partner, wear that hat, not engage with him like a sibling, and that's a very different hat. Yeah. But very importantly, not to do it in front of other people, because while we're like, oh, there's no animosity, and we'll just be like, rah, like, no one wants to work in that environment where, and I can imagine if, married couples are running a business, right, you might have the same thing. That's like, you don't want it to be uncomfortable for your staff if you're treating each other with the casualness that perhaps that relationship, it's okay in one relationship, but it's not okay in the work sense.
Yeah. Context is key.
Context is key.
Yeah. So we've had a wide-ranging conversation and we've kind of picked the threads that I've thought could be interesting, but I wonder if there's any unturned stones that would be things that could be of interest to you at the moment or that could be of interest to the audience.
It's been a pretty good conversation. Like we've covered a lot, right? From my childhood through to my exit, from culture, challenges, co-founders. Yeah, I mean, there's just so much we could go on, right? But Thank you for such an interesting and wide-ranging chat.
It's been a pleasure, and I've got one parting question for you.
Go on.
So it's the alternate universe question. So you went through you've had 3 quite diverse and interesting careers already. So travel, then you went into strategy, and then you've done the startup life. But in an alternate universe where there's another Janine, and so she had a different career that was very, very deeply satisfying to her, what would that have been?
I always wanted to be an engineer. And when I went to uni, I tried to enroll in engineering, but because I dropped out of school, I didn't have the math requirement. Ironically, I ended up doing stage 3 calculus as part of econometrics and was kicking myself. But, I did think about that the other day. I was like, I would have loved to have done an engineering career, but I think I still would have ended up where I am now because the cryptocurrency business was so unrelated to my corporate life. that probably would have happened anyway. And so it's kind of fascinating that I could have done a completely different path in the intervening years and then still ended up right here.
Yeah, cool. Do you know which type of engineer? Structural, civil?
Civil, yeah.
Civil, yeah, okay, cool, right. Yeah, I've always had a fascination with large power generation and water storage facilities. I don't know why. I think I had a similar bent, but likewise my mathematics was okay, but not amazing to head into that space. So yeah, that's a good answer. Janine, thank you so much. I'm really pleased for the relationship we've developed over the last few years and the friendship that we've got now. Looking forward to tracking your progress in future, and also to our trip to Central America, so we can practice our Spanish together into next year, Colombia specifically. So you've been very generous with your time and your insights, and for people to follow you, LinkedIn, that's probably the best place at the moment, is that right?
Yeah, I'm not a very heavy social media user, but LinkedIn is my home base, so follow me there, and reach out if you have any questions, any comments, tell me what I should be watching or reading, and thank you, Josh, so much for having me on. It's been a pleasure.
Thanks, Janine. If you enjoy these episodes, I hope you do. I love filming them, and the guests always say what a great and often cathartic experience it is for them. Then please do like and share. Hit me up on LinkedIn. I'm open to connect requests, and occasionally get emails from people as well asking me about my experience around certain subjects. So please do like and share, and continue to follow the show. I really appreciate your ears.